Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors.
Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to take a step back and look at where we are with artificial intelligence from a few perspectives. You know, this has been framed as a long runway for growth, the idea of a technological revolution, so reshaping how people work, create, invest, while unlocking productivity gains, right? A super cycle to really have a major impact on economic growth. Think in the trillions of dollars. Now, that's all sort of long-term and hopeful and conceptual, but, you know, the reality is we're seeing really big moves in the current environment, a lot around capital spending, right, CapEx, and especially among the hyperscalers. And yet, as investors, we all have to sort of focus on how that translates to returns. How does that translate to results? And so I want to get into some of the data and then where we see things going from here. So let's take a step back again and look at the economy. So various companies, you know, take consulting firms like McKinsey or PwC. They've done a bunch of studies. Hey, how much is going to this impact the economy? And so the McKinsey study ultimately resulted in a trying to measure. Think of it as the annual impact of AI, and it's in the trillions. So just the number range that I got from the team on that report was $2.6 to $4.4 trillion per year in impact from AI. PwC basically focused on an upside, an improvement to GDP growth, right? And sort of the size of GDP, and the number they had was 14%. So growth rate, and that's kind of an impact into the early 2030s. So whatever the numbers are, just think very major impacts. Now, when it comes to how that gets done, of course, companies have to invest, number one, in the infrastructure for AI to run. Then companies actually have to deploy AI. But going to that first step, the CapEx for sort of the picks and shovels, like how does this stuff run? Companies like Amazon, Microsoft, Alphabet, Meta, those four together have spent $750 billion, round numbers, between 2023 and 2025. And that's more than double the prior 3-year period. So we're seeing an acceleration in growth. And you know, sort of the way they're deploying those capabilities, these companies, and more broadly the Mag 7, are having still strong earnings, generally speaking, strong earnings growth themselves, right? And so they're still a major driver. These companies, for example, in first quarter, the Mag 7 are expected to be roughly 2/3 of the earnings growth for the quarter, year over year. So this first quarter versus last first quarter. And then in terms of sort of contribution for the full year, think in the neighborhood of 37% of the earnings growth for the full year. Again, these are all estimates, but just they're having an impact. Now, the good news is that earnings strength, Mag 7 has been dominating the market, but the earnings strength itself is really broadening. And so what we're seeing is that companies are beating expectations. 83% of the companies that have reported so far have beaten profit estimates by an average of 11%, and think ultimately earnings being about 20 or so percent above expectations overall. And so that is just translating again to a higher level of earnings growth than maybe what might have been anticipated as we started the year. Now, another thing is as it relates to seeing revisions, how earnings are revised by analysts. Essentially, what we're seeing is an increase for second quarter. Like, people are optimistic. They're seeing this growth, and they're kind of tweaking their estimates for second quarter up a little bit. When normally what happens is as we get closer to the period and reporting, usually there's a little bit of a haircut. So again, the reason for mentioning this is there's just this optimism built into the environment, and it's very much AI related. So we know that that AI investments, for example, in equipment and software. So think of it as going past the data center build to actually the stuff in the data center and the software needed to run AI. It's a meaningful share of GDP growth. So we estimate, or there are estimates that approximately 1.5 of the 2% annualized real GDP growth for first quarter relates to this AI business investment. Now, when we think about this shift, I mentioned this idea of a shift from data center construction, for example, into equipment and software. We're seeing the equipment spend up over 17% and software up over 13%. So meaningful changes, if you will, and sort of focus in that area. And all of this, anyway, to kind of wrap up, is just to remind us that AI is going to have a big impact. It's ultimately going to have a big impact on the economy. It's going to be really supportive. And so as we look at this, number one, the companies are figuring out how to help deliver AI. Number two, companies are trying to figure out how to use AI. And then ultimately, as investors, we watch and consider how companies are doing that when we make decisions on whether to invest, because it's easy to spend money. It's more important that we see what ultimately the return on the investment is as we move forward. So anyway, those are the concepts I wanted to get into in this episode. I really appreciate you taking the time to check it out, and we'll see you soon. Talk to you in the next one. Thanks so much.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.